Hello, everybody. Thank you for joining us today. We are Harvard University Employees Credit Union, and this is a presentation about credit, credit scores, and how to manage your credit. I'm joined today, I am your host, Terrence Bazil, and I'm a community engagement specialist with HUECU. And I'm also joined by Shira Davis from MGB to talk a little bit about the Employee Assistance Program.
Thanks so much, Terrence. So again, my name is Shira with the Employee Assistance Program here at MGB, and just wanted to do a little reminder of the MGB services so that you're all aware of what is available to you. And so this is, of course, available to you, but also to your household members, family members who live in your home, knowing that whatever stressor might be going on likely impacts others too. And so wanting to make sure they get access to the same help that you have access to. And so I like this slide because it kind of groups things in three different sections here. I think the personal well-being is what people typically associate the EAP with. A lot of the stressors that we face that can cause real difficulty, any kind of depression, anxiety, concerns about grief and loss, relationship issues. And we are a confidential and safe place for you to go to for any real concerns that you might have in your life. Especially if you're looking for any kind of referral to a therapist in the community, we can always help with that, providing assessment, short-term counseling, and also resources and referrals as needed. The bucket for the workplace one at the bottom, it would say people often come to us when they have some concerns around the workplace and sometimes don't know where to go. We are a great point of consult for that. And especially when there's big changes in the workplace or losses or any real difficulties, it would be helpful to connect with someone, just know that we're available. And then for the family life section, I think those are the more concrete resources that we offer. And whether it is around childcare, elder care, parenting, I think we have a lot of resources on our website. If you're like me and you like to look up a bit of information before contacting us, feel free to check out our website at eap.partners.org. And for financial and legal, we also have access to free consults to attorneys and financial advisors. And so I know that you might have some of this information, is how you found out about this webinar today, but I think it's always helpful to have a reminder that we are here and available to you. So I'll turn it back to you now, Terrence. Thank you so much.
Thank you so much, Shira. Thank you for sharing that. And I'm glad you are a resource and we can be a benefit to your community. So, some housekeeping tips as we get into today's webinar. If you have any concerns, please don't be worried about it at all. We've reduced background noise, so anything going on in your background will be good to go. Please use the Q&A feature. The chat has been disabled and allows us on the back end to ensure we answer all your questions and fulfill the information ensure that you get the information that you need today. And this presentation will be recorded and will be posted on our YouTube channel to watch at myhuecu.org/YouTube, and you'll be able to find it. And please take our post-workshop survey. We love to know how we did and how we can improve this benefit and continue to give value to our membership. Now, a little bit about the Harvard community. We are exclusively serving the Harvard affiliate community, whether you're a staff member, you're a student, or even if you're one of the SEGs, and as an MGB, you are part of the SEG, so you can join if interested. And we do offer great products, whether it's higher interest rates on savings, or lower interest rates on loans. We truly do exist for our community and those that reside in it. Also, we have a new branch in the Longwood Medical area. We are located at 435 Brookline Ave. We love to see new members come in. We love to see you. Please stop by. We always have things going on. Come on in, say hi, and we're more than happy to welcome you. Now, jumping right into it, how credit works. We're going to start this presentation off by looking at the impacts of credit and what's the different factors of having a maybe not so favorable credit score versus a higher credit score will translate to in terms of costs, savings, and different interest rates in terms of payments. Looking at this chart, we can see kind of the bottom end, 500 to 589 credit score. You might qualify for a a higher interest rate, like 17%, maybe not exactly that, but it's not exactly favorable if you're out in the market right now and you're looking for a loan product, which translates to a higher monthly payment and additional interest costs over the course of the year. Where looking at the bottom end, it's about $5,000 in initial interest that you'll have to pay for the same loan. And realistically, I don't want you to pay that. Nobody wants to pay extra interest for the same product. So we're here to learn about it, how we can possibly improve our credit scores, and what we can do to have a positive impact so that way we don't have to pay the additional interest to our lenders. Because we can take that money, take that $5,000 and possibly apply it towards paying down a loan. Maybe you're going on vacation and repurposing those funds into something that allows you to bring in more joy into your life. Same thing on the other end of the spectrum, where a higher credit score will qualify you for a lower interest rate, thus a lower monthly payment. And if you're at that top tier, there's no additional costs over the course of the year. And this is where the biggest impact truly is. If you're able to refinance your debt and maybe you were in a situation where, you know what, things were tough, but you have then since changed and transitioned out of that difficult environment, and now you're able to have a higher credit score, kind of get your payments going. Maybe refinancing is something that you would like to consider. So that way you can take advantage of the additional cost savings associated with having a higher credit score. Now, what is credit? As now we've talked about the impact of having good credit, what's going on, let's see what credit is. Just to kind of set the standards, credit is utilizing a loan now and paying it back over a period of time, normally with certain stipulations, whether it is interest rates, maybe it's a certain amount of a term, for example, maybe 60 months, 90 months, or even a 30-year fixed mortgage for those who are looking to auto loans and mortgages out there. And those terms can be flexible depending on the loan product that you choose. And it may also be directly linked to your credit score as well, and how those terms are created and drafted and what terms you qualify for. What is credit? What is not credit? Credit is not using cash, for example. Your debit card is not credit. Once you are able to use that card or line and pay it down to zero, or I'm sorry, spend down to zero, that's your cash, and that money is not coming back. That's very different where a revolving credit card, where you can actually have a line and a limit associated with it, and you can keep going until you hit that limit, but you will have to pay that back. Some quick information on the credit bureaus that is crucial for you to know as you're beginning your journey, or even if you're far along your journey, maybe this is new to you, what have you, this is some great information to have. To start, there's three major credit bureaus: Experian, TransUnion, and Equifax. What these three bureaus do is they collect information on you as a consumer that then is used by different lenders to qualify your credit worthiness when you are applying for loans. Again, auto loans, credit cards, mortgages. This is the information that the lenders use to determine, hey, will this person pay my loan back on time? Maybe it allows you to get more favorable terms. And the information that they do collect from you is pretty substantial. The information that is collected will be shown on your credit report. And I do want to clarify that a credit report is significantly different than a credit score. A credit report can be compared to a transcript where it shows all your classes, what's going on, the times, the schedule, your teachers, as opposed to a credit score, which might show just your GPA. Credit score is just a quick numerical value that shows a snapshot of your payment history and whatnot. To go into credit reports, what a typical credit report will have is debt: your credit card debt, auto debt, education debt, and in terms of how frequently you've paid, if you've paid in full or not, your account history, if you have an account that's been open for a long-standing time and it's been managed well. By managed well, I mean you've made payments on time, you've paid in full, you never missed a payment. Having good account history does work and does help in your favor in boosting your credit score. Also, what will be reported is collections. Anything that you may or may not have paid, maybe it's medical debt, maybe it is any debt that realistically hasn't been paid and has been sent to collections, can have a negative impact on your credit report and your credit score. And you're able to request your credit report from one website and one website only, free of charge. It's annualcreditreport.com. And Shannon, I would like you to please put this in the chat right now. Annualcreditreport.com is the only place to get it. It's completely secure. You will have to put in some information to allow, so just to get your credit report. And when you do have it, I do want to stress the importance of it to, one, check it frequently so that way you're able to ensure the accuracy of the information on your credit report, especially right now in a time of scams and fraud and inflation, where there's a lot of identity theft out there, and how these bad actors get a hold of your information could be any number of ways. The way to counteract that is by checking your credit report frequently, ensuring that all the information on it is in fact accurate. What you don't want is to have a line opened up in your name that you did not authorize, you are not aware of, and have something happen where it's maxed out and someone's having a great time using your identity and your credit, and you're left with the bill. What I would recommend is pulling each bureau once every quarter. Maybe TransUnion at the beginning of the year, January, February, March, or April, pull Experian second quarter of the year, and keep it going so on, so that way you're always able to keep updated on the information that's there. And as soon as you do see something that doesn't seem accurate, the sooner you take action against it, the better off you will be over the long run. Now, to go into a sample credit report so that when you do pull your report, you know what to look for. This is an example of a positive impacting credit report, where this is very long. This is an old example, so no personally identified information, and we can look at what the credit report has on it to look out for. For example, as a lender, when this is pulled, this is what I see. I can see the credit limit, high balance, and this right here, all of these C's. This tells me that this person has paid their bill and has been current for at least the last 25 months. This is great payment history. I can also see they have a current balance of $4,216, which could be high, could be low, and it's okay. Compared to the credit limit, this is a high balance. And I do want to highlight right here, this scheduled payment. This information, it says to the lender, hey, this is how much this person is responsible to pay at the end of the month, every single month, to have a current payment history of being paid as full. So the minimum payment required is only $127. So what this tells me is at every single month, this person has made this payment in full at the very least. This does not mean that the balance has been brought down to zero, but just that the scheduled payment has been made. If you're looking to just make your payment every month, this is more than enough, and this will lead to a positive impact in credit report. To show you a negative impact in credit report, this is an example of what I mentioned earlier and alluded to, where this member was not aware that this bill had been open in their name, and in fact had been open for quite some time. It was negatively impacting them because it was opened. I think it was a family member who had opened it, and it stayed and was tanking her credit report for quite some time. She continued to be denied for loans. She was getting unfavorable interest rates because due to her credit score, and she didn't know what was going on. We sat her down, we pulled her credit report and said, "Hey, did you know that you had $310 that was due to Comcast?" She said no, so we were able to get it fixed, and it was completely rectified afterwards. But the thing is, this, even though it's relatively small, it can have a dramatic impact on your credit report, especially because if you're looking right over here, you can see that this has gone derogatory 4 times. So this person has gone not 30, 60, or 90 plus days, but beyond that multiple times over the past 7 years. And this will continue to hurt. This is one of the reasons why I continue to reinforce checking your credit report frequently and being on top of it, because the last thing you want, especially if you're looking to make a big purchase in the future, is to have something like this and not be aware of it, when you can easily take advantage and clean it up sooner than later. And also, if any questions do come in while I'm going through the presentation, please use the Q&A feature. We'll be more than happy to address them at the end of the presentation. And I really want to ensure that I give as most value as possible, so that way you walk away from this learning a little bit more. Now, to talk about some credit report timings, there are some different things that will remain on your credit report based on what they are. And just as a quick overview, credit inquiries, I'll give a little bit of a tidbit here that I like to show. Um, if you are in the business, or not in the business, but in the market for a new loan product, for example, a mortgage, and you're shopping around, you're comparing lenders, and you don't want to have your credit pulled and hard pulled multiple times by multiple different lenders, because that does have a small impact on your credit report. What you can do is consolidate your credit inquiries into a 14-day window. And what that means is, let's say I'm looking to bank with HUECU or bank with Quincy Credit Union or what have you, any other banks, and you want to compare to see which financial institution will give you the best interest rate based on your financial information. What I would do is start the conversation and let them all know through an email or in person and say, hey, please pull my credit within this 14-day window. What that communicates to the credit bureaus is that you are now shopping around, you are in the business for a mortgage or whatever loan product, and it will consolidate all of those inquiries into one, so that way it doesn't have that much of a negative impact, as opposed to having 24 inquiries spread out over a multiple month period as you're shopping around. Credit inquiries do stay on your credit report for 2 years. However, there are two different types of credit inquiries. One is a soft pull, where you are pulling your credit for educational purposes only, and that does not impact your credit whatsoever. This is where you'll be, for example, if you go through Green Path and they pull your credit for the sake of helping you budget and have some financial counseling, no concerns there. Same thing with if you are looking at your credit through Credit Karma, NerdWallet, or any other banking apps that are just offered to say, hey, please take a look at it, you can review it without any issues. That is very separate from a hard inquiry. A hard inquiry is when a lender does pull your credit and with the intention of providing you a loan product. That will be a hard pull, and those do add up if you do not do the 14-day window over time into potentially a lower credit score. The rest of these civil judgments, pay tax liens, any kind of late payments like this can stay on your credit report for 7 years. That doesn't mean they will always negatively impact for the entirety of the 7 years, but they will show up. And with bankruptcy and other things, I would reach out to GreenPath for specific answers to your specific situations to see if there's anything that you can do to possibly get them removed, or if they're going to be there and stay there, how you can go about navigating that conversation with your lender, so that way you're still able to get favorable credit worthiness scenarios, for example. Open accounts in good standing stay on your credit report indefinitely, which is phenomenal. And closed accounts in good standing also stays in your credit report for 10 years. I do want to communicate, closing accounts, depending on the history of it, can have a positive or negative impact on your credit report. It's not always going to be a black and white response. It really will depend on a few number of factors, whether your account was in good standing, or good payment history with it, if it's an oldest account, and how many other accounts that you have open when you consider closing this one. So very much is a conversation. It does depend on your unique situation, and I would contact GreenPath. Shannon, if you could please put that link in the chat right now, and we'll go over it a bit more. GreenPath is a great resource that we offer completely free of charge to our membership. All you have to do is say HUECU sent you, and be more than happy to offer some financial counseling for your specific situation. Now, how to dispute errors in the credit report. If there are some things that you feel like, hey, are not correct or not accurate, please visit consumerftc.gov for sample letters on how to dispute errors on your credit report. And you must contact the credit report within 30 days. It must be in writing, and the credit bureaus have 30 days to begin their investigation. While that investigation is going on, you might see the item in question be removed from your credit report as the investigation is going on. And you could also see your credit score increase as a result of the disputed item being removed. That doesn't mean everything is completely okay. What happens is they will do an investigation to verify the validity of that item, whether it's a loan or a judgment on you or whatever, what have you. While the investigation is going on, it will be removed. Once it is proved to be either correct, it will show up and it will stay there, or it will be removed because it was in fact incorrect. There are also a couple different options. If you see something incorrect, you can go directly to the lender and say, hey, this is something that I have showing up on my credit report, where, for example, if you see a missed payment when you know you made the payment in full, it could have been incorrectly reported by the lender. And you can definitely follow up with that lender and say, hey, what's going on here? How do I rectify the situation? And how do we go about fixing it going forward? You also might need to follow with the credit bureau or the lender check in due to anything that could be going on. Maybe you want to keep this top of mind for both the lenders and the credit bureaus. Now, what to do if your information is compromised, which is especially true right now in this era of scams and fraud. It's very risky, and you really want to ensure that you're doing everything in your power to keep yourself protected from what could be going on. For example, you are able to set a fraud alert. A fraud alert notifies businesses to go through extra steps to verify your identity before it issues credit. So they may try to contact you. Sorry if there's meowing in the background. My cat's kind of going nuts. A fraud alert is not a credit freeze, though. What it does, it allows the business to, for example, if a password is going on or if someone is opening up a new line, it's just really just an extra layer of protection to protect you. Setting up a fraud alert is super easy. You can contact each of the credit bureaus to place an alert on your account, but it only lasts for 1 year. It by all means is not permanent. If you suspect something has happened where somebody has contacted you or your information may be compromised, setting up a fraud alert is one of the best ways to initially start that process and say, hey, I don't want this to happen again, or setting up that second layer of security. Next up is a credit freeze. A credit freeze restricts access to your credit report as a whole, where when you are said reaching out to the lender and you want that hard loan inquiry and you're saying, hey, I really need this, a freeze restricts the information the lender can see. And that's not true for just the lender, but for everybody. So if anybody is looking to access your credit report or credit information to extend a line to you, a freeze completely blocks it. And it does exist for as long as you keep the freeze on your account. So this is a bit more of a permanent option. Some find this to be a bit cumbersome because it does allow, you have to have some human input to allow whatever lender you're going through to extend credit to you. Some people find it kind of comforting because you know for a fact nothing can be opened in your name without your express approval, without your immediate, hey, I'm going to allow this to happen. Setting up a credit freeze is relatively easy. You will have to set individual ones with each individual credit bureau. So Experian, TransUnion, and Equifax. In some cases, there's a PIN involved, and it does last until you ask for it to be lifted. If you do have a credit freeze on your account and you are in the market for a loan and you want it to be lifted, all you would do is you would ask the lender which credit bureau that they use. Maybe some auto lenders utilize specific credit bureaus. They may not use all three. For example, I know Honda uses TransUnion. So when I was looking for my car, I simply lifted my freeze on my TransUnion information for 2 days, gave the window to Honda, and they pulled it and everything was okay. At the end of the 2 days, the freeze was back on my account, and I was once again protected from potential fraud. Again, if you have any questions during this, please put them in the Q&A, and I'll be more than happy to answer. Let's see, okay. Next up, managing your credit score. One of the greatest ways to manage your credit score is using our partner, GreenPath, to learn a bit more about what's going on. And it's a completely free financial education tool. They offer credit tools, paying on your credit card debt and making the most of your money. That is huecu.org/greenpath. If Shannon can also put this Learning Lab Plus in. I can't say enough great things about Learning Lab Plus because they're bite-sized courses and they're super introductory, very low barrier to entry to learn some information about how to potentially increase your credit score or take advantage of any kind of financial wellness that you're curious about. Now, what is a credit score? A credit score is a quick snapshot of your credit worthiness and credit risk for lenders. It's completely independently managed outside of the credit bureaus. There might be a misconception that the credit bureaus also manage your credit score. That is not the case. They are completely independently managed by the FICO score and Vantage score. And what they'll do is they'll take a range of factors to determine what your credit score is, which we'll talk about a little bit later. I just want to show what the different ranges are, which we saw earlier. There's poor, fair, above average, and excellent. Depending on the lender, the exact credit score may not specifically matter, but what range you fall in will matter when it comes to lending decisions in the future. This is a quick chart that shows what exactly will comprise, what a credit score is comprised of. The biggest impacting factors on your credit score will be payment history and amounts owed. Payment history is 35% of your credit score. To go a little bit deeper into payment history, it's looking at, have you made your payments on time and have you made them in full? We looked at earlier on credits reports, the minimum payment that was due was $127, while the balance was higher than that. So as long as you're making the minimum payment due on time in full, your payment history will reflect that you are paying as agreed, which has a positive impact towards building a credit score. Next factor is amounts owed. Amounts owed is how much outstanding debt do you have in relation to the outstanding debt that you have available to you. So this is where your credit utilization comes in. You want to keep that number within 30%. It's very 30% and 30% just seems to be a magic number with this, where if I have a credit limit of $1,000, I do not want to exceed a balance of $300 on it at any given time. You can go over, but you do want to pay that balance down to zero. Once you get a little bit higher, it potentially could have a negative impact. So these two factors right here, amounts owed and payment history, these are completely in your control as consumers and have the most impact if you're looking to build your credit score over time. Next factor is length of credit history. You do have some control over this as a consumer, but this is more subject to time, where it really just means how long have you had credit, whether it's a very old credit card, your first credit card, maybe it's an extremely old mortgage that you have, what have you. But having a good length of credit history is beneficial. Not as beneficial as payment history and amounts owed, but it does help, and it is taken into consideration when looking at what a credit score is comprised of and how to possibly improve your credit score. Next two things that have impacts, but not terrible impacts, is credit mix. By credit mix, it's what different types of credit you have. There's revolving credit, which is credit cards, you use it, you pay it down, it's always a revolving line. There's also installment loans. Installment loans are loans that will eventually mature over time and end. This will be your auto loans, your mortgages, for example, again, where There's a certain amount of months that you must pay, and at the end of it, you will have the asset, the car, what have you, whatever you are financing, and that will end. I will, by all means, I'm not saying go out and open different lines, get different credit cards for the sake of having a good credit mix. It's a negligible impact on your overall credit score. Next up is new credit, which also falls into this as well. How many lines you have open right now? Do you have new lines that are currently being opened? And again, not saying to go out there and have multiple credit cards for the sake of having that new credit going. If you really want to ensure that you have enough that you feel like you can manage it appropriately with payment history, amounts owed, and having a good length of time. I have multiple friends who have one credit card, one or two credit cards, and they've had it all their lives with 800 credit scores. And I have friends who have 6 to 7 credit cards who also have 800 credit scores. The credit score is not going to be directly linked to how many cards you have. It really is directly linked to how well you manage it. To check your Vantage credit score, which is a little bit different than FICO credit score in terms of payment history. Payment history is a lot more influential at age and type of credits. It's secondly down, but to visit and learn a bit more, go to yourvantagescore.com. It's completely free to look and see what's going on and learn about how you could potentially impact your Vantage score. It's very similar in comparison to the FICO score and how the scoring models break down and the different impacts each factor has in terms of payment history, age of credit, and percentage used. Next up, sample credit score. This is a sample of a not so high credit score and some of the factors that will be displayed to lenders if they pull it to see what's going on. For example, this 488 is not the best. And some of the factors that we can see is serious delinquency, number of accounts with delinquency. And this to me tells me that this person may not be paying their bills on time, may not be paying in full, or may have circumstances, situations that do not allow them or do not afford them the ability to make their payments in a timely manner. So maybe I may not lend to this person because it seems like what they have right now is currently not something that they can manage appropriately. For example, this is another credit score that's more middle of the road. 656, not bad. I think this is average credit. And again, I see lack of revolving account information, derogatory public record collection files, too few accounts. This tells me this person's working on their credit. Maybe they used to be a 48 and they're currently in the process of getting a little bit better. Maybe they're on the younger side. There could be multiple factors that leads to a 656. It's by all means not a bad credit score or a negative credit score, very much middle of the road. Next up, a 748. This is a very high credit score, someone who has amazing credit. They've been able to manage their credit properly. But again, we can still see some of the negative factors. Too few accounts currently paid as agreed, lack of recent installment loan information. But again, you can still have these score factor descriptions and still have a phenomenal credit score. So by all means, these are not death sentences or saying, hey, once you get a score factor code or determination that is negative, it's over for you. No, by all means, I do want to communicate this is a message of hope where no matter where you are on the spectrum right now, today, you can transition into a higher score if that is your goal. You can't go above an 850 because that's the limit. But if you are currently facing some financial hardships and you feel like something's happening, especially with student loans coming back, and you're concerned about the impact of missing a payment with your student loan or the impact it could have on your credit score, no matter what have you, please reach out to GreenPath so we can have a conversation and see what your options are. And if you do potentially have things that go wrong because life happens and we're all human, please know it is not the end. These scores are fluid. It's completely within your power to change and help and allow yourself the grace to take a look at whatever negative factors are hitting your credit score to say, how can I possibly make changes? And if you can't right now, maybe make a plan. I'll be more than happy to even call HUECU to see if we can make a plan, or GreenPath again is a phenomenal resource for your specific situation. Now, there are a few options to improve your credit scores. If you can do a secured or unsecured credit cards, I personally like this option because a secured credit card for me has a lot less risk with it, where the money that is securing the credit card is your own. So the limit that is set on a secured credit card is completely your own funds. How it works is if you want a limit of $500, you then deposit $500 and that becomes your new limit, as opposed to unsecured credit cards where the limit is set by the lender and there's no financial backing that you've put up to secure that loan and say, hey, if anything happens, there's money here. If at one point you default on a secured credit card, the money used to supply the credit card itself is used to pay it off and you're good to go. There are special loans that you could also utilize as well, depending on the lender. There's credit builder loans or debt consolidation loans. Debt consolidation loans are very useful if you have multiple credit cards open with multiple different payments, with multiple different interest rates, and having multiple different payments seems like it's a little bit too much to manage. You are able to consolidate all of the outstanding debt into one loan and spread it out over a fixed period of time, whether it's 5, 7, or X amount of years, with one interest rate, and interest rates typically for debt consolidation loans can be lower than credit card interest rates. With the one monthly payment, it does allow for easier budgeting because you just have to manage one payment as opposed to 3 to 4. And again, I'm going to keep talking about GreenPath because it's a phenomenal resource, one-on-one financial counseling to talk about what specific options they can offer you to boost your credit score. Next up, choosing a credit card. And I know we're about halfway through. Please bear with me so we get with questions so I can answer them towards the end. This is a busy screen. I know it is. I'm fully aware of it. And what I want to do is highlight some quick tips and features to parse this up a bit. So that way, as you're out there, you're shopping for maybe new credit cards, maybe you're looking to boost them out or whatever, what have you, things to be on the lookout for as you're shopping around. This is a Schumer box. This information has to be disclosed with every single with every single credit card, so that way you're able to compare each credit card using similar information and apples to apples, orange to oranges like terms. For example, please look at the first box, 0% intro APR for the first 12 billing cycles. And this information right here is key and crucial. 0% intro APR, it does exactly what it says. For the first 12 months, there will be no interest rate for this credit card. And that can be a little bit tricky for some people because it allows you to get comfortable with only making principal payments back on your credit card. And you may not even realize that there's no interest being charged to you until at the end of the 12 months, all of a sudden you may or may not have a high balance that then will be exposed to the new APR based on your credit worthiness at that time. So it could be 11.74% or 17.99% based on your credit worthiness. And these are old numbers. I've seen on the high side as high as 29.99%. And depending on your limits and your balance, and again, your credit worthiness, where your credit score is, it could be significantly higher. And this is a very slippery slope where interest in this case is working against you. So please be on the lookout and read these boxes very carefully. 100% check the annual percentage rates to ensure that you know what you're getting into before you sign up for these credit cards. Next up is cash advances, where if you're in a dire emergency, maybe you don't have cash with you and you need cash, you will be paying interest on that cash as opposed to taking out cash from your debit card completely free of charge. And the APR, again, is high. So taking out cash for the sake of emergencies, and I fully understand emergencies happen, it may not be the best thing to do if you pull cash from your credit card because you will be paying interest on it. And again, that varies based on the market prime rate and your credit worthiness. So these credit cards come with a lot of hidden fees and interest rates that you want to be very wary of before you get into it, because 12 months in, situations can change dramatically, and you may not know what your APR will be. And before you get into it, please do your research. Next up is the fees box. So these fees will also have to be disclosed, where for balance transfers, 2%, cash advances in this example is none, and late payment fees and return check fees. I show this slide because depending on the credit card you have, there could be an annual fee to hold it. American Express is like that, and or some Barclays cards could have fees. And this really is just to help you to bring awareness to you. So that way, if you do have an existing credit card and you're paying fees on it, you may not know it, maybe reach out and say, hey, what's going on? Maybe you could potentially negotiate the fees and get them reduced. For example, I have a credit card currently actually, where a couple months ago the interest rate jumped dramatically on me because it was tied to prime rate. And I reached out to the lender directly and said, hey, I'm making payments and I don't see my balance going down. Is there any way we could potentially put a pause on this? And they said yes. So I think my payments beforehand were 150, and I had a balance of I think $2,000 or $3,000 on it. For the next 8 months or 9 months, I was able to have a reduced interest rate down to 4.99%. Granted, my credit card was shut off, so I wasn't able to add new transactions to it, but it wasn't completely like closing my line. It just allowed me the space to pay my balance down with the lower interest rate. And all it took was me asking. So I cannot stress enough the importance and the power of reaching out to your lender and opening that conversation to see what options exist to help you get out of tough financial constraints without doing something drastic, such as closing a credit card or potentially just not paying. If you are currently receiving credit card offers, you can, by all means, if you don't like the junk mail, you can go to optoutpressscreen.com. And Shannon, please put that link in the chat as well, where you'll be removed and you will no longer be solicited credit card offers. And as we get closer to the end of our presentation, the Q&A will be coming up soon. Please, 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 if you are in a situation where you feel like things are hopeless, or you're not feeling completely comfortable, or you have any concerns at all, or you feel like things are great, you just want someone to kind of have a check-in with, please visit GreenPath. They offer free financial counseling, and all you have to do is say HUECU sent you, or visit huecu.org/greenpath, and they'll be more than happy to help. They have extended business hours, so it's not just 9 to 5, and they also speak over 100 different languages, and they'll be more than happy to help. We also have a smart rewards savings accounts feature. So if you're looking to see if maybe you could possibly get a bit more bang for your buck with what's in savings right now, we currently have a 4% smart savings rewards, which is honestly not too bad at all. And I think it's a great way to utilize and capitalize on potential savings if you have them. Also, please visit our blog at huecu.org. We update it very frequently. I think it's 3 times per week with new relevant information to make available to you, our membership, completely free of charge. We try our best to keep the content relevant with what's going on in the market right now. And please let us know how we did. Please let me know how you enjoy this survey. If there's any ways that we can make it eventually better, please take our survey at huecu.org/survey. I read all the notes and comments so that way I can continue to improve and refine this process to deliver value to you, our membership. And full disclaimer, any numbers that you saw during this presentation has been only for educational purposes only. I am not a financial advisor. As a joke, please don't sue me. I'm purely here to offer some guidance, offer some information, and be a resource to you, our partners, and offer any information I possibly can. Now, let's keep in touch, and I'll be going through the Q&A process and seeing what questions I can answer. So first question is, how do you remove an old delinquency over 7 years old? In this case, I would reach out to GreenPath to see what type of delinquency it is. I did have a brief slide, and I can paste that link in the chat, which I think it's consumerftc.gov to get a sample letter. But I would first reach out to GreenPath to talk about your specific situation to see what the best route is. Next question. Does the annual credit report charge any fees for credit report anytime? Nope, there are no fees for annualcreditreport.com. It's completely free of charge. There may be a limit to how often you can pull each individual bureau. I know during the time of the pandemic, that limit was lifted quickly. However, I do want to communicate that that was old information. Times might have changed, but there's 100% no fees for pulling your credit report from annualcreditreport.com. Next question is, why do multiple hard pulls affect the credit score? Multiple hard pulls affect the credit score because based on the viewpoint from the lender, it appears that you may be desperate for credit and you are going through a financial hard time, and it may not be the best idea to lend to you at that time. So one of the options, if you are shopping around and you're not like in the position of being desperate for credit, consolidate them into 2 weeks. All of the lenders and credit bureaus know that this is what's going on, and it shows that you're shopping around and not just in financial constraints. Next question. When in good standing, why do creditors increase credit line? Can the account holder request to stop extending credit line? Yes, you are able to request to stop extending a credit line, and creditors do extend a credit line and increase because you have good payment history as a way to just reward you to say, hey, thank you for doing this. Maybe it's a way to say, do you want to continue using it? And you can very much, if you feel uncomfortable with the line being extended, say, I'm good here, or please decrease my line. You can actually request a credit line decrease to a point where you feel more comfortable. There's no fees with that. There's no penalties. It's not going to impact your credit score. And if you want any more information about specifics around it, you can completely contact GreenPath as well. But again, there should be no fees or any negative consequences for requesting a decrease. The process to do a freeze for the credit bureaus is you will have to go, I'm sorry, the question is, can you repeat the process to please do a freeze with the credit bureaus? To do a freeze with each credit bureau, you will have to contact them individually, whether it's Experian, TransUnion, or Equifax. You can go on their website. You would create an account with each individual one. There's a place where you can request a freeze or add a freeze, and there will be a PIN associated with it or a password. You place that PIN and or password, and you place a freeze on it, and it's there. I hope that answers your question. Next is, how long does it take to unfreeze that credit freeze? So if I know I'm going to apply for a loan, what would the process be? So to remove a credit freeze, first I would have a conversation with the lender to know which credit bureaus need to be unfrozen. Depending on the loan you're requesting, you might have to unfreeze all 3 credit bureaus or an individual credit bureau that is specifically associated with the lender that you're applying for the loan with. If the case is you need a specific bureau unfrozen, you would then go to that specific bureau, whether it's TransUnion, Equifax, or Experian, and log in and unfreeze. You have the option to unfreeze permanently or the option to unfreeze for a certain window of time. Normally, the unfreeze happens pretty quickly, but just for the sake of time and internet and whatnot, it could take a little bit longer. I would give a window of about 24 hours after you've lifted the freeze to allow the lender to go in and pull your credit and then refreeze it afterwards. You could also have a conversation with the lender and say maybe you need 48 hours or however long you need, or you and the lender have that conversation for, you are able to unfreeze and then refreeze. Next question, is Credit Karma a legit site to use to view your credit score and history? Credit Karma is in and of itself a legit site. However, the information on Credit Karma may not be as accurate compared to pulling your credit report and having a credit score directly from Experian or the credit bureaus or FICO score, VantageScore.com. Credit Karma very much pulls the information kind of secondhand from the credit bureaus and then shows you a score. The numbers itself might be a little off, but in my experience, it has been pretty much within the range of what to expect, or it could very much be kind of far off. I wouldn't use Credit Karma as your legit source of this is my exact information, but it can be a useful source for educational purposes. Next question, is there a negative effect if the bank increases your credit line? No, no negative effect at all. And from what I've seen, and it could depend on your situation. In my experience, I have not seen a negative effect. If you've noticed one, I would definitely contact GreenPath and see exactly what happened. But in my experience, and I haven't seen a negative impact to an increase in credit line. I believe that was all the questions in the Q&A, and it's currently 12:50. We have about 10 minutes left. Thank you so much for joining me. Thank you so much, Shannon and Ty and Shira, for being a part of this presentation. And if there's any questions at all as they're coming in, please let me know. If not, thank you again for joining us and enjoy the rest of your day.